Thank you, Renju. Good afternoon, everyone, and welcome to DFM Foods Earnings Conference Call. Today for the call, we have the senior management represented by Mr. Lagan Shastri, Managing Director and CEO, and Mr. Nikhil Mathur, CFO. Before we start, I would just like to mention that in today's conference call, some of the statements might be forward-looking in nature. Actual results could differ from those expressed or implied. At this point in time, I would request Mr. Lagan Shastri to make his opening remarks. Thank you, and over to you, sir.
Good afternoon, everybody, and a very warm welcome to all joining this call today. In keeping with our past practice, I would like to reiterate our strategic priorities which have defined our journey so far. The 4 strategic pillars that I have been talking about for our organization remain the same and are consistent. Number 1 continues to be driving accelerated growth. Number 2 is sustaining profitability. Continuing to focus is number 3 on people and talent. And setting up scalable systems and governance standards is the 4th pillar for us. I will talk about the 4 pillars in a little bit more detail from here on. On the first one, which is driving accelerated growth, in Q1, the extruded market grew 20% year-on-year, showing a resurgence of sorts after the third wave of COVID-19. DFM grew market share in this resurgent market by 70 basis points year-on-year at an all-India level and by 90 basis points in its focus geographies. We posted a strong revenue growth of 32.1% year-on-year, supported by our investments in brand building and sales infrastructure. We have kept a sharp focus on strengthening our retail channel sales infrastructure. Our investments in this space have increased, and they have also helped increase the weighted distribution for rings, nutcut, and frits by 200 to 600 basis points in our core geography, that is North India. We are pleased to report that our efforts to grow geographies outside the North are bearing fruit, with the relative salience of these regions increasing at a steady pace month on month. We continue to invest actively in our core brands. We ran a TV campaign on Fritz in Q1, supported by a strong 360-degree on-ground activation. We are confident that initiatives such as these will go a long way in strengthening our brands and creating a lasting mind space among our customers and consumers. Our focus on alternate channel continues as we build stronger relationships with these platforms and chains. Number 2 is sustained profitability, especially in a volatile commodity inflation environment. The unprecedented commodity inflation I spoke about in our last call raged well into Q1 of this financial year. Palm oil on an average rose 22% in Q1 over the previous quarter. Other key packaging materials like laminates and corrugated boxes as well as fuel like PNG followed a similar inflationary trend, putting significant pressure on margins. We were able to stave off a significant chunk of this inflationary onslaught to a large extent, in part thanks to our ongoing comprehensive cost management program. We unlocked several efficiencies and exploited levers of cost optimization across the operations of the company. Even though commodity prices have appeared to settle down in the short term, we will continue to push the envelope on cost control, exploring every new opportunity. Additionally, the investments behind our brands empowered us to take bold decisions on pricing through grammage reductions. As such, we were able to defend material margins at 36.1% in the quarter gone by for our product portfolio, excluding new category expansions. I am happy to highlight that our large pack business continues to grow and is becoming an important margin driver for the company. Similarly, our decision to enter a new segment, potato chips last year, is progressing well and as per plans and expectations. Despite being active in only 3 states, this business has grown rapidly. In this manner, our strategy of diversification across segments and price points is progressing as per plan. In our earlier calls, I had emphasized the need for the company to build capacity and capability to fuel future growth. In keeping with this philosophy, we have continued investing in the brands, sales infrastructure, technology, and talent. I cannot overemphasize the role of these elements in laying the foundation of a future-ready, robust organization capable of churning out products that consumers love and delivering profitable growth for all its stakeholders. In line with this strategy, we have invested on advertising and marketing spends that have grown from 4.7% of net sales in Q1FY22 to 9.1% in Q1 this year, and go-to-market expenses that grew from 2.3% of net sales to 3.4% in the same period. The benefits from these investments have started accruing to us in the form of market share improvements. The third pillar has been focusing on people and talent. We recognize that the foundation of a future-ready organization rests on a strong and motivated team bound together by the single, unifying objective of driving profitable growth for the company. To this end, we are creating avenues for open channels of engagement across levels and functions and have doubled down on training and development in a substantial way. We have made structural changes in our organization that will enable our teams to respond faster to the needs of channel partners and consumers. We've also looked at delayering the sales structure, which has been executed recently. Setting up scalable systems and governance standards are our fourth pillar. Even as we drive accelerated growth, sustain profitability in a volatile environment, and focus on people and talent, it's critical that we set up scalable systems and governance standards in this company. We remain absolutely uncompromising on compliance and governance standards. The rollout of our IT initiatives saw an important implementation of ERP across the organization in July. With this, we expect significant efficiencies to accrue in the form of smoother and faster operations, improved information visibility across the company, and more agile decision-making. At DFM, we are passionate about the environment. I am proud of the fact that we have been a 100% plastic neutral organization for the last 3 years. By way of our CSR initiatives, we continue our endeavors to improve the nutritional status of children in the age groups of 6 to 14 years, in partnership with a leading NGO, through interventions such as supplements and awareness building and other things. In conclusion, I would say that Q1 was marked by good revenue growth and market share gains on a year-on-year basis. We continue to face the challenges of commodity inflation, which we countered through cost focus and pragmatic economic changes. We remain committed to our strategy of investing to build brands that consumers love, sales infrastructure that is resilient, and technology that powers the front and the back end. Once again, my sincere thanks to you all for joining our earnings call today. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question, and also ask all the questions in one go. If any more questions after that to ask, please rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinal Seth from Africa Capital Advisors LLP. Please go ahead.
Good afternoon, Lagan and the team and the board. Good signs of at least improvements being seen. Just wanted to kind of touch base where obviously if the YOY growth might not be entirely right because the June last year base was quite low due to COVID. But if I'm still, if you look around and out of home has been growing, and especially the quarter has been strong for a lot of other players, and listening to commentary of other players, you kind of get the confirmation. Just trying to understand that why are we not seeing that in our category and numbers yet? Any thoughts on that?
Yeah. So could you just repeat? There was a slight blur in the first part of what you said. Can you repeat the first part?
No, so I was basically I'm referring to out-of-home consumption, which has been strong across other categories, and this is what we pick up from the national players. So what I'm trying to understand is that, our YOY growth is not entirely representative because the base has been quite low in June 21. So what I'm trying to understand is that why are we not seeing that pick up in the total extruded industry and our numbers? Obviously, yes, we have grown market share, but I'm still trying to understand the growth in our industry.
Yeah. So, thanks for the question. The simple answer of that is extruded category within the salty snacks, savory snacks category has been slightly slower over the last 2.5 years as compared to the other three savory snacks categories, which is basically traditional namkeens, bridged as we call it, and potato chips. So our primary business being in extruded, and extruded category in general being little slow, specifically because it was highly focused probably on children, and schools were dramatically affected over the last 2 years. Even in the April, May, June quarter, there was a significant part of summer holidays that happened, and that's normally traditionally been a slow quarter for extruded in general. So part of what you may be seeing as compared to others would be probably in line with how the extruded category itself behaves. But in general, our industry now is showing signs of recovery, in terms of the moment schools reopen in July, and in terms of schools reopening and extruded category picking up. Even in the quarter of April, May, June, this is the first time the extruded category in general has grown reasonably fast at almost 20%, which is much better than the quarters before, when it was growing at 3 to 7%. But I agree with you that a part of this has to do with the cycle of COVID wave, which happened last year. But that is for everybody.
Just one last observation there is that even if I were to look Q on Q, obviously the travel, I mean, if we look around and the travel has been quite strong. And I take your point on schools reopening. It's just, I'm yet perplexed that even with the travel, we've not kind of shown that improvement, and I'm referring to the industry. So it's a little. We'll have to wait and watch how what you're referring to, how things turn out in the quarters to come. But it's probably not been to the mark.
Oh, sure. But just to clarify, sequentially, it has been almost stable. We have grown slightly at 3 to 4%, as you would notice that in the results. But yes, Q1 traditionally, for the last N number of years, it's not just COVID, pre-COVID also, has been among the slowest quarters for this particular subcategory.
Okay, thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Faisal Hawa from HG Hawa & Co. Please go ahead. Mr. Abhishek, you can go ahead and ask a question now.
Okay. Sorry, I have joined late, so if I repeated you, I'm extremely sorry. I just want to understand what is your outlook on raw material pressure right now, and how you see margins going forward?
So in the short term, there is volatility and continues to be there. Volatility, Abhishek, there is some amount of simmering down of the heat in the commodity cycle, but it is again, a lot of it has to do with sentiments and the way the world is working. In the world of a Ukraine war, in the world of so many things happening, any small or big change can dramatically alter how things will look in the future. So would not want to give you a clear forecast as to what can happen, because very difficult, is almost like a roulette. But absolutely currently as we speak, like you're seeing in the market, there is some cooling down in the immediate vicinity of the commodity cycle. But we can't forecast that. That's why we continue to focus on a very strong cost management program, because in case something doesn't work towards in our favor, we are ready for it.
And how the things right now at this point of time, July, any guideline on July, how the things now, the schools are opening up and everything is on the good side right now?
So we would refrain from giving any guidelines for this quarter. Having said it, the fact remains the schools have reopened, and the fact remains, which is public knowledge, that commodities have cooled down.
Okay. Thank you, sir. Thank you.
Thank you. Next question is from the line of Sanjay Jain, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Good afternoon and thank you for the opportunity. I had two basic questions. Number one being, can you give me some color on our North India versus the rest of India bifurcation of our top line in this quarter versus what it used to be before the marketing and go-to-market initiative started? That is question number one. Question number two being our employee cost as a percentage of our sales for June 22 was approximately like between 12 and 13%, and we have been maintaining this run rate for the last 2 quarters. Does the company expect to maintain this run rate going forward, or there are some one-offs, or can you give me some color on the employee cost as a total percentage of the total sales, please?
So there have been, improvements as I called out in my, earlier conversation that other regions have come in and are going as per plan, which means they are going as per expectation. Our mix has got a little better and balanced out. I would not want to give you geographical split, but I will certainly say that the mix of the non-North zones has gone up. And is as per the plan that we have laid out for ourselves.
Okay. And sir, with respect to the employee cost as a percentage of total sales, is that in lines with what we are planning, or?
So employees continue to be our investment. As I said, one of the key investment levers is, investing in people and talent. And as part of that journey and our GTM investments, we continue to invest behind this space, which includes employees of all front end and back end. We are currently in an investment phase, and therefore beyond this, I would not want to forecast how this will look over the next couple of quarters and going forward. But currently, as you are seeing from our results, we are in the investment phase in this particular cost.
Okay, fair enough. Thank you.
Okay.
Thank you. Next question is from the line of Faisal Hawa from HG Hawa & Co. Please go ahead, sir.
Sir, as far as the products for the next 3 to 4 years are concerned, are we in the process of developing any new products? And what kind of R&D do you depend upon to develop the new products? And what is the kind of team that you have which works on these products? And is there some strategy within the board to really continuously rely on some kind of percentage from new products to enhance revenue growth, or is it only a geographical expansion that you are focusing on?
Yeah, so we, as we pointed out in some of our earlier earning calls, we have invested in R&D head and a small working team under him. Based on that, we are continuing to work like any other company in this space on innovation and developing the innovation pipeline. Innovation in terms of products obviously have a lot of varying spaces. Improvements in current products, expanding into other flavors within the current products, looking at new platforms, new categories. So, as you are aware, we have got into one category with potato chips earlier. We had launched a few flavors, as you're already aware. So, but if you see it in total, right, because obviously the pipeline itself is a combination of the total, and we've shared that in the investor deck also, that our portfolio mix of total products that are in development, piloting, or rather, any form of market pilot or market pilot or launch has moved up from Q1 of FY21 at 3% to all the way up to 19%. So 19% of our portfolio mix has been recently deployed over the last 2 years. So it is quiet and it is silent, but it is there. So it's happening, and so that's what the story is about.
So 19% of revenue is coming from new products?
19% of revenues are coming from products which are not there in terms of SKUs 2 years ago.
And sir, as a strategy, do we have some kind of strategy where we look at niche categories, which are on which the MNCs are not focused on where or some categories which suit only to the Indian palate, and is that a strategy, or you would like, if need be, you would take on the big MNCs also head on also in some categories?
We believe we have a competitive advantage in the category and space that we are in, and we believe investing in that space will continue to yield results and give us long-term advantage, and that's the space we want to be in, which is why we are investing behind our current brands and building them, both from a GTM space and a brand building space. So currently we are focused, and we continue to focus on the categories that we are.
And sir, how are we beefing up our social media advertising? Are we using the influencer networks, or is there something different that we are now trying to really beef up that portion of our advertising spend as well?
So we are using the digital space and the social media space. In fact, for Rings in the recent campaign, we did use influencers, and this was the dance video that we put in. And we have active campaigns running as we speak, which use social media influencers. Yes, we do that.
Oh. And how has it been effective as opposed to the old strategy of television and print?
It's very early to comment on the results, but we have initiated that over the last 1.5 quarters. And as we speak, results will start building up.
Thank you so much for answering so well, sir.
Thank you. Next question is from the line of Nitin Gosar from Invesco. Please go ahead.
Yeah. Thank you for the opportunity. A couple of questions. Wanted to understand employee cost. The QOQ increase that we are seeing, does it reflect increase in the talent pool, or does it reflect the increase in wage hikes?
It's a combination of wage hikes and new people. A significant chunk of that would be new investments that we would have made behind people. Yes.
Okay. On GTM, the investments that we have been doing, the number shows around 5 crore for 2 consecutive quarters. Does it now fully reflect the cost that can be built around in this investment, or these are not the numbers where it will stabilize?
So investments in GTM are calibrated on a monthly, quarterly basis results, right? So we invest in something and results are reviewed, and basis that decisions are taken. So they will continue to be in the form of that manner. So currently what you see is the investments we have done. At the right time in the future, if we believe we need to make additional investments, we will do so. And where we think we need to withdraw, we will do so. That's part of normal management practice that we have here.
Okay, but currently we are good with this number, or this number is not true reflection of what plans that we carry?
These are the numbers that we have currently, and we'll keep developing our plans, and in time we will see the results.
And the last one is on the gross margin. QOQ basis RM inflation as we go into the upcoming quarter is subsiding. Ceteris paribus, if I were to make a judgment from here on, our existing numbers, that is around first quarter, reflects the full impact of inflationary environment, and from there on the raw material deflation has started to come in. That should help the company, or company has to still do a catch-up? The peak inflation environment is behind.
So like any company, we have and continue to have inventory on both sides of the equation, and I would not hazard how will July, August, September look, but suffice to say that in April, May, June, we had peak inflation. And as you're seeing the reports for everybody, inflation seems to have subsided, but every company and every system has some inventories which are there.
Good. Thank you. This was helpful.
Thank you. Next question is from the line of Abhishek Jain from Arihant Capital. Please go ahead.
Sir, I have one more question, largely on the raw material side. First, where you are seeing the maximum easing out pressure on the raw material side, whereas on the commodity side or maybe on the packaging side, where exactly you are seeing, or maybe a palm oil side, where exactly, and there are some of the areas where you are still facing challenges. And second, on the new product launches, if you can throw some light on the same also. And your strategy for expansion outside North.
Yeah. So I think this is public news, but the maximum pressure that came on to the industry was on palm oil, and therefore there has been easing around on that, but it is still very volatile, as you are aware, and it's still much higher than what it would have been a year ago or a year and a half ago. So we don't know which side it will go. So I don't want to forecast anything, but I can say right now that we have absorbed that in the last quarter. In terms of new products, I said this earlier that we have a small R&D team which continues to work on current products and improvement on that, along with continuing to identify any new platforms if they have to come and when they have to come. But these are all things that are part of our regular R&D department, and like any other company, we are continuing to look at pipeline building around that. And as I said earlier in the investor deck, our current new SKUs, and specifying if new SKUs, it could be current products, current new packs, or completely new products, are now 19% of our mix.
Thank you.
Thank you. Next question is on the line of Venkata Subramaniam Raman from Organic Capital. Please go ahead, sir.
Hi. Thanks for the opportunity. I am new to the company, so I'll keep my questions at the macro level. Aspirationally, we are at something like about 500 odd crores. Aspirationally, in about a couple of years from now, where can we possibly see ourselves? A. B. Are there categories inside our portfolio which can grow materially to, say, about a $50 million kind of brand or specific offering? And 3, we seem to have built a fairly large and systematically built a nice organization. How well built is this organization for, a growth which is 2 times this or 3 times this? Based on your inputs, I may have more questions.
So we continue to aspire to grow profitably and sustainably, and as part of that, I laid out the 4 pillars that we have, which is growing at an accelerated pace in the market, growing at a way in which we are sustaining profits, while we focus on people and talent and scale up the system, make systems scalable for a growth organization or a future-ready organization. Now, those are the 4 pillars, and beyond that, I've already given color on those 4. So beyond that, I can't, give a guideline on what the number or what we are looking for. But these are the 4 pillars, and we'll make sure that those 4 pillars are balanced as we grow the organization.
While digesting that input, those pillars, have they, over the last 8 quarters, given you satisfaction in terms of the growth that you have kind of reported? Or are the challenges been so overwhelming that we shouldn't probably look at the last 6 to 8 quarters and look for more robust growth going forward? Because I'm not getting a full color here.
So, given the context of last 2 years, it is in line with management expectations. Having said it, the context of last 2 years is for everybody to see, right? So we have invested in technology, we have invested in people, we have invested in marketing and sales. And in the context of last 2 years, we are confident in where we are as an organization.
Okay. I may have one last question, which is, an extension of what I asked. Are there categories within what we have on offer that can grow into, let's say, Lays or, something as large as that, which is...
We believe that, I said that earlier, not that. I said that earlier that we believe in the strength of our primary space that we work in with extruded. We believe it has got long-term potential, and therefore we continue to invest in brands in that space behind it, and we will continue to do so. So we certainly believe that these are categories and brands which can become big. We believe in that.
Oh, okay. I'll leave it there. Right, thanks. Bye.
Thank you. Next question is from the line of Nilesh Shah from Envision Capital. Please go ahead, sir.
Congratulations on the quarter, on the growth for this quarter. You, of course, said that June is a seasonally weak quarter, traditionally has been seasonally weak quarter, and you've not yet seen the kind of demand cropping up from the school segment as yet in a significant manner. What would you ascribe this quarter's growth to? I mean, 32% growth year on year is obviously the best growth rate that we have achieved in the last 12 quarters. So what do you think has contributed to this growth in this quarter?
So it's a mix of two primary things. One is obviously the spaces of investment that we've done in marketing and sales in GTM. And the second is the fact that we are cycling a COVID quarter. So both those things combined is what's adding up to this. Why we are confident that our investments are working is because we are gaining share and distribution, even as we cycle a COVID quarter.
Just as a follow-on question, in terms of the distribution you mentioned, so I'm just kind of keen to know what are the kind of challenges or headwinds that we still continue to face as we kind of expand our geographical canvas and go out of our traditional strongholds into rest of the country. Can you give some kind of color in terms of what's the kind of narrative or the pushback that we kind of get when we try to expand our distribution footprint, or as we try and tap into distributors or retail outlets which traditionally have not been stocking our products but whom we are approaching? What's the kind of pushback? Because it is a hyper-competitive segment. We are not the only brand out there. There are many other brands. And I'm sure these retail outlets keep products of other brands as well. So what's the kind of feedback or the response that we're getting from these players?
So whenever we expand or any company expands territory, the single biggest driver is having the right talent in place. And once you have the right talent, then having the right set of distributors and distributor partners, and then finally getting stable sales from a selling system. And then finally, once you're able to sell in, then you get the off-take, right? So in our journey, we are driving on all these 3 or 4 levers. And therefore, in terms of any expansion, as long as these 4 levers are in balance, we should be okay and therefore get scale. And this is what we are currently doing. So that probably answers your question in a slightly different way.
The other question, I just come back to the first quarter performance. Is that like kind of now what we have achieved in the first quarter? Is that kind of a new normal in terms of setting a benchmark for the future quarters and future years? Why I'm asking this is because traditionally in June quarter we do about 110 crores of revenues, and then rest of the 3 quarters we've ended up doing about 140, 150 kind of crores of revenues. And given that Q1 is seasonally weak for us, does this mean and the rest 3 quarters are pretty much 1.2, 1.25x of what we do in Q1? Is that the way we should be looking at saying is that now having made investments over the last 4 to 6 quarters, we are now on to a slightly higher kind of a trajectory or higher, we're gliding higher, and therefore the Q1 should be taken as a reference point for the future?
I would refrain from saying anything on that except for the fact that you have historical data with you, and you can look at it. Best to say that the last quarter, like any other Q1FY quarter, was a school holiday quarter, and this industry does get affected by that. That's about it, and that's where we are.
Great. So my last question is in terms of where we are in our journey of investing for the future, and it's been now about 4 to 6 quarters of investments that we have essentially been in, and we probably would have whichever way we look at the numbers, we've probably invested about between 80 to 100 crores in the last 4 to 6 quarters. Where do you think we are in this journey? Is it still kind of early days, or do you think we're fairly advanced in that journey?
In terms of our journey, we are very much in the journey. At what stage in the journey we are, I will not be able to comment because that will be future looking. But we believe in the investments that we are making currently, and we believe that they are working and are in the right direction. We will continue to make such investments as long as we believe that they are working. That's the way I put it. And we are certainly part of somewhere in the journey. I just want to comment where we are right now.
Thank you. Next question is from the line of Samra Siddiqui from Revolve Advisory Private Limited. Please go ahead.
Thank you for giving me the opportunity. Good afternoon. I just want to know, sir, that despite of good revenues and advertisement expenses, still we are not having a good bottom line from last many quarters. So, what is the strategy actually? Spending or more advertisement and in gathering customers, or having a more innovative product, or maybe a diversifying customer category? What would be the strategy to improve the bottom line?
Yeah. So the way I would like to answer it is, structurally, we have a very robust margin structure, as you're aware. We have, even in a high inflation environment, we have been able to have a very good gross margin. So structurally, our products, our SKUs continue to remain very profitable and are growing. We have chosen as a strategy to invest all the money that is being generated and a little bit more into the investment that we have been talking about. And we believe that they are paying in terms of our market share, in terms of our distribution gains, and in terms of our results that are coming through. And we believe that we will calibrate or not calibrate this basis results like any other management, and we continue doing so. So in that context, these investments are right, and we believe they are right, and that's where we are.
Thank you. Next question is from the line of Hemal, an individual investor. Please go ahead.
Thank you for the opportunity. I just have 2 quick questions. One is on our net debt is 20 odd crores this quarter, right? Is there, as you're investing and growing, is there a number to which you prescribe to as to where are there any metrics by which you would not go beyond that as you do your capital allocation?
Your first 3 words or 4 words kind of jumbled up. Could you repeat the first 3, 4 or couple of sentences?
I was just talking about your net debt. Can you hear me now? Is that clear? Hello?
Yeah, we can hear you. Yeah.
So I was talking about your net debt. I was saying that as of June 22, you have 20 crore of odd debt, not net debt. Is there, as you're expanding and growing and investing, is there a number or a metric beyond which you would not go in your net debt position?
No, there is no such number that I can comment on. And right now, we are comfortable in our financial position overall.
Okay. Okay, thank you. Again, I appreciate your answering this question. Thank you. That's all I have for myself.
Thank you. Next question is on the line of Himanshu. Please go ahead.
Thank you. Sir, I just had a couple of questions. First one was if you can let us know the current mix that we have of rupees 5, rupees 10 and other packs, if possible. The second one was just wanted to have some sense on what sort of a response we've got for the newly launched potato chips in markets like UP, Haryana, Uttarakhand. And finally, as you said that you'll be spending aggressively, so A&P spends have moved up. So do you think the current run rate is what we should build in going forward as well? So if you can just give your comments on these three, sir. Thanks.
See, chips, as I said earlier, is going as per expectation, and we believe it is doing well for us, and we continue looking at it closely. And as and when the right time comes, we will take a look at what to do with it. But that's going as per expectation. Similarly, large pack is going as per expectation. The mix has increased. I would not want to hazard what exactly the mix is. It has improved, and we hope to continue looking at improving it. On the third part, in terms of future guidance on how the business is going to grow or not grow, I would refrain from saying anything on that. As I would just repeat that our investments, we believe, are working for us, and we continue focusing on them and the basics of the business.
Thank you. Next question is from the line of Vaibhav Bharjatia from Honesty and Integrity Investment. Please go ahead.
Yeah. Hi, sir. I hope I'm audible.
Yes.
Yeah. Thanks for providing the opportunity. If you can provide a flavor of, how you're seeing the recovery between urban and rural market, that would be helpful, because we keep hearing different things regarding what's happening in rural, whether there is slowdown, there is recovery, there's just all confusion around. So what you are seeing in your category, particularly only in the mature products and your traditional market, that would be really helpful if you can provide some color on that.
In the last quarter, we have seen demographic growth, between the channels of urban and rural. So there is not any substantial difference between the two. Our urban retail has continued to grow. That obviously is leading the charge, but when you look at the total urban and total rural, it is similar.
Okay. Okay. That's it from my side. Thank you.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Himanshu for closing comments.
Yeah, thanks, Ranju. And Mr. Shastri, thank you so much for patiently answering all the queries. So, sir, would you like to end the call with any closing comments?
Yeah. Thanks a lot, everybody, for showing, as usual, keen interest in our company. We are really happy to engage and interact with all of you, and look forward for the next earnings call. Thanks a lot.
Thank you. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.